So hello everyone, wishing you all a very happy Diwali, and in this occasion of Diwali I'm going to give you a special gift, and that gift is going to be this particular video. In this particular video we are going to talk about option chain, what is open interest, how are we going to trade, how are we going to take a proper entry and exit by looking this option chain, and how are we going to book at least minimum a profit of 1:4. So in this video we are going to discuss all these topics, and this video is worth 4,000 rupees, and I'm going to give you this particular video free of cost for this Diwali. So let's start learning from this option chain first. So what is option chain, or what is option matrix? So what is option chain or what is option matrix, we are going to start learning from this very particular point. So the background noise might be disturbing a lot, but yeah, it's fine because it's Diwali. Let them enjoy, let them burn crackers, it's fine. But the background noise will be little bit noisy, but it's okay. Let's focus on learning. So at the very first step, we'll just discuss about what is option chain. Option chain is nothing but a listing of all available options contracts for a given security. It shows all the it shows all the call option, it shows all the puts option. So first, I guess everybody might have some idea about what is call, what is put. Call is nothing but whenever market goes up, whenever the index goes up, the call prices increases, and whenever the index prices goes down, the call's premium decreases, and whenever the index prices goes up, the puts premium gets decreases, and whenever the index prices goes up, the puts premium decreases. Now let's start from option chain. What is option chain? Option chain is nothing but a listing of all available options contracts for a given security. It shows all call options, put options, change in volume, change in IV, change in open interest, change ask price. Also all the details of the particular strike price is shown in this option chain. So option chain is otherwise known as option matrix. Option matrix is nothing but option chain. So people usually sometimes call as option matrix, or sometimes known as option chains. So we can just know it by the name of option chain. So I guess everybody might have a bit knowledge about what is call option, what is put option. First, let me explain a little bit about what is call option and what is put option. Call option is nothing but whenever the index prices goes up, the calls prices increases, and whenever the index prices goes down, calls premium decreases. And then the same thing in opposite side, whenever the index prices goes up, the put premium decreases. Whenever the index prices goes down, the put premium increases. So this is nothing but the opposite of call. So the opposite of put is call, and the opposite of call is put. So it's nothing but put is particularly known as bearish, and call is particularly known as bullish. So in call option we have call seller, call buyer. In put option we have put seller and put buyer. But the first thing we have to focus in this option chain is in the calls side, people are selling calls. People are not buying calls, but people are selling calls in the option chain, in particularly in this option chain. So the people betting in this calls side, they are selling calls, they are not buying calls. The people who are betting in this puts side, they are selling puts, they are not buying puts. So what do you mean by selling call and selling puts? So selling calls is nothing but the sellers want the premiums to get decay. So let's say a particular of 300 rupees. So 300 rupees, this 300 rupees of call CE option, people are selling. That means they want this 300 to get decay. So selling calls means what? So selling calls means market is not bullish. So people who bet on not bullish, people will start selling call. Why do people sell call? People sell call because they don't want the market to go up. And why do people sell put? People sell put because they don't want the market to go down. So if the market is sideways or if the market goes up, they are going to be in profit. If the market goes in call side, if the market goes down or if the market goes sideways, everybody who sells calls will be in profit. So what is the next step? Next step is we are going to learn what is open interest. If you don't get what I'm saying, you play the video so that you might understand again clearly. So watch this video again and again so that you'll gain the knowledge about what is call and what is put. So the first thing, what is open interest? Open interest is nothing but it is the total number of option contracts that are currently there. So the contracts that have been traded but not yet liquidated by an offsetting trade or an exercise or assignment. So the definition goes like this. So what is open interest usually? Open interest is nothing but the people are betting in this. The number of people betting in this particular strike price. What is strike price? The strike. These are all known as strike price. So I'm not going to go detail in this. What is about strike price and what is all this. So I'm just focusing on what is open interest. So what is open interest? People, those who are betting on this particular strike price, the number of people betting on this particular strike price, it is shown in this option, also open interest side. So these are the number of people betting in this particular strike price. For example, if 3 people are selling calls, if 3 people are selling this 41,000 particular strike price, if 3 people are selling this, then the OI will be 3. If 40,800, if people are selling in this 40,800, if 5 people are selling in this 40,800 strike price, then the OI will be 5. So now, so now what is open interest? The number of betting in this particular strike price, this is known as open interest. So the number of people or the number of shares or the amount of people who are betting in this particular strike price will be shown in open interest. So open interest is nothing but the total number of option contracts that are currently out there. So by looking at this open interest, what we can understand is that, so just have a look here, it is 1,864, here it is 31,000. So what is the highest? Where is the highest amount people are betting? So this is 58,000, this is 42,000. Oh, here it's 1,30,000. So this is the highest. So let's see whether 1,30,000 is the highest. 1,30,000. Okay, so this 1,30,000 is the highest point. So let's mark this 1,30,000. So what particular strike price is this? This is 41,000 call option. And in the same thing, let's have a look in put side. So where is the highest people betting in put side? So let's focus on 1,10,000, 1,04,000. Okay, so this is the highest. So this is 1,10,000. The next highest, what is this? This is 1,04,000. Okay, so we are not going to focus in this. We are going to focus in this particular strike price. Which strike price is this? This is 40,500. So this is 40,500 PE and this is 41,000 CE. So what does it mean by looking at this OI chart? This shows that the people betting in 41,000 CE, so everyone, majority of the people is betting in 41,000 call and majority of the people are betting in 40,500 put. So what does this mean? This means in 40,500 people are expecting not to go below this. So the people who sell puts, they are expecting the market not to go bearish from 40,500. That means they don't want the market below 40,500. So they want the market to go up or they want the market to go sideways. So this is the main thing for the sellers. So now what is the main thing for these call sellers 41,000 who start selling in 41,000? So they don't want the market to go above 41,000. So they want the market to go below this 41,000 or they want the market to go in this sideways. So now what is this? See here, have a focus on this. 41,000 is the high point and 40,500 is the low point. So 41,000 will be the resistance and 40,500 will be the support. So And what is resistance? Resistance is the spot price. Resistance is the place where it will reverse from it. Means, so what is resistance? Resistance level is the opposite of a support level. It is a price point where the stock price is not expected to rise any higher point from this. So this is resistance. That means the price point, so the particular stock is not expected to rise anything above 41,000. So this is known as resistance. See, this is the resistance point. The same thing, 40,500 is the support. So what is support? Support means the particular stock price is not expected to go below this 40,500. So here in this 41,000 and 40,500, okay, so in this particular range the trading will be there. So 41, so people, those who are going for hedging, or people those who are doing say 40,000, 41,000 and 40,500. So but people those who are hedging can hedge in this. So if someone is doing hedging, if someone is doing hedging, then they will get the profit if the market stays in this range from 41,000 to 40,500. So this is how we are going to look at where is support and where is resistance. So this is how we are going to look where is support and where is resistance. So where is support? We'll look support here 40,500 with the highest OI volume, the highest OI volume in put side and highest OI volume in call side. So that will act as the support and resistance. So this is how we are going to identify support and resistance. So what is our next topic? So our next topic is how to book at least 1:4 target. So in this particular topic, we are going to discuss how an option buyer is eligible, or how an option buyer can book 1:4 very easily. Now let's assume that you are bullish from this particular point. So this is the particular candle and you are bullish till here. So this is the target and this is going to be your entry point. So how we are going to trade? So let's assume you are capable of 100 quantities. You are capable to risk for 100 quantities and you are planning to buy 100 quantity. So what are you going to do if you are bullish from this particular point? The background noise is a little bit a disturbing one, but yeah, please focus on learning. So this is the particular entry price. So now start testing the market whether my analysis is correct or wrong. So start investing 25% of your quantity and let the market go in your direction first. So the market went in your direction first. Then again, now let 25% of your shares be included in the position. Why? Because if you invested here everything, all of your quantity here at a go, then if the market suddenly reverses from here, you are going to lose all the quantities. Now let's say the market goes up and again it reverses. So again, if it reverses again, then you can take your stop loss here at cost. So this is the technique, this is the logic behind this target. So now let's say you are bullish from here and this is your target. This is your particular target, and so let's say you are going to put 100 quantity here. So now invest 25 quantity and your assumption is the market should go up. Now let's say the market came up again. Now invest another 25. Again the market is in your direction. I invest another 25. Again the market is in your direction. I invest another 25. So finally book all your profit here. So this is how you are going to book your profit. Now let's say you are investing here, you are investing here, you are investing here. Now let's say the market went up again, it reverses. Now you are going to take your stop loss here, and you are not going to lose anything because your actual stop loss is here. So this is how you are going to trade. You are not going to invest everything at a particular go. At one go, you are not going to invest everything because because loss is a very difficult thing which every traders face. So I'll take you an example in Excel sheet, then people might understand. Okay, first I'll show you the video. So this is the video. Okay, so this is the particular video which I have traded in last Friday. So okay, now this is the particular trade which I took here. So I bought something at 144 Okay, and now the next thing is I have to buy another at 161, again another I have to buy at 168, again another I have to buy at 179, and my target is 186. So this is how my trade goes. Doesn't matter if I buy in OTM or ITM or ATM. See, everything depends on strategy. People might say that don't buy in OTM, you will end up losing money, but I don't care. I follow my own strategy. I will buy OTM whenever I feel like buying OTM. I'll buy ATM. I'll buy ITM whenever I feel like buying ITM, ATM, OTM. So it doesn't matter that if we buy OTM, we won't earn. Even if we buy OTM also, we'll earn. See how I earn in this day. So the first thing is I invest half of my quantity here. Why? Because my target is still here, and if I invest all the quantity here, who knows if it reverses from here. So this is my stop loss. So now let's focus on okay. Somewhere here 35. Okay, the video is a bit long, that's why it's taking a little time. Okay, so now finally all the quantities are all the quantities which I have placed in this, everything is bought, and now I'm waiting for my target 186. So you know this day on Friday it went high till 340 or something. Yeah, I was not there, but I just took on 200 because I don't want that much. My only target is at 186, but it went very fast at 200 or something. So I book nearby 199 or 200. So that was my position. So this is how you are going to book traders. Just don't think that if you buy only in ITM you'll earn profit. So this is how you are going to invest, and this is known as pyramiding. If you buy in pyramiding, so how do pyramiding work? So how do pyramiding work? Pyramiding works. So this is my calculator. This is my calculator, and see if I want to buy at 95, then my stop loss will be at 71. Then my next position will be on 105. So whenever I buy this at 105, my stop loss will be trailing till 78, and I'll buy next at 117, and my trailing stop loss will be 88, and my next buying will be 124, and my trailing stop loss will be 97. So this is how. See, the first thing is I'm going to buy here, and my stop loss is here. Again, I'll buy here, and my stop loss will be here. Again, I'll buy here, and my stop loss will be here. So this is how, if you don't trail your stop loss, you'll lose up heavily. The only thing here is you have to trail your stop loss according to your buying position. So if you buy again here, you are going to trail your stop loss here. Again, if you buy here, you are going to trail your stop loss here. And this is the calculator. This is my calculator. I have calculated everything and place. So if you buy at 95, and if you put your 71 stop loss, your loss will be 600. So in this particular trade, your maximum loss will be 1325, and your minimum loss will be 600, and your minimum profit will be 5450. So this is the profit. So at pyramiding 7 you are going to book, but it is very easy to reach pyramiding 7 on trending days. It will reach like pyramiding 23 or 24. It's very easy to reach this pyramiding 7, but my only target is pyramiding 7. Sometimes I'll focus till pyramiding 13, 14, but my first target is this is the so by risking 1325, you are going to earn 5450. So this will be minimum like 1:4 above. So this is how you are going to earn, guys. I'll show you this pyramiding. So let's say if you want to buy something at okay, so if you want to buy 106, and this is how you are going to see you bought something at 106, and your next stop loss will be 82. So buy your next position at 116, and your stop loss will be 89. So this calculator will show you where should you buy and where will you enter in the for the next quantity, and where will you enter for the next quantity. So this everything will be shown here. So where is your pyramiding 1, where is your pyramiding 2, where is your pyramiding 3. So according to this calculator, you are going to place all the new quantities, and you are going to trail your stop loss according to this pyramiding calculator. So this pyramiding calculator, I'm just charging for the traders for 1499, and this is for lifetime. So once if anybody purchases this will be for lifetime, and the only price is 1499. Traders, this is how you are going to trade. And see, any premium users put here, let's say you want to buy at 144, just type here 144, automatically your stop loss will be here, and your next pyramiding position will be on 154, 166, 173, and this is the place where you'll trade your stop loss, and this is the minimum loss, and this is the maximum loss, 1325, and this is your minimum profit. So this is how you're going to earn in this strategy known as pyramiding. So I guess everyone have got some idea about how to do pyramiding, how to get at least 1:4 target, and what is option chain or option matrix, and what is open interest. And according to the option chain, according to the open interest, how we are going to identify support and resistance. I didn't go deep detail because the background noise is very it's a very disturbance for me now, so I'm not going a deep detail in all these topics, but I guess everyone might have got some idea. And yeah, slowly I'm going to add up some videos in YouTube. And if this video was helpful to you, please like, subscribe, and share, so that and click on the bell icon, so that whenever I upload new videos, you will be the first one to watch. So and again, I'm wishing you a happy Diwali again, and stay safe. And if you guys want to join my Telegram group, the link is given in this description box below. You can click on that and you can join the Telegram. In this Telegram, we are going to send you the market tips and how we are going to trade, and how will be the market analysis for today. And if you want to join intraday tips, and you can click on the link below. We are going to send the tips in this particular group, and we have a special offer for November. If anybody gets the highest profit percentage in this group, we are going to give out all the courses for free, for beginner courses, intermediate courses, and advanced courses for free. So if you want to avail this offer, click on the link. So if you want to avail this offer, contact me through 936-200-3502. So this is my number, 936-200-3502, and it is given in this area. So you can contact in this number via chat or in WhatsApp. You can text me in this number if you want to join in this particular group, and the charge will be only 2,499. So in this group, we have calls which I will be trading myself, and all the members in this group, they are going to contest each other, and I'll be selecting the person with the highest profit percentage, not on the highest profit, but highest profit percentage. If someone gets 10%, someone gets 20%, the person who gets 20% will be the highest, and he will be the winner. So the winner will get all the courses for free. And moreover, you will be a profitable in the month, because I myself will trade in this, and you guys will be profitable for sure. You won't lose any money. But the main thing is, I want everyone to earn a lot. So I want everyone to earn a lot. So, and that's the reason I'm giving you the offer only for the highest profit percentage. So that's it, guys. We'll see you in the next video.